Hello, everyone. In this video, I want to go over the auditor's role in the revenue cycle. So in the last video, we talked about inherent and control risks. And we know from our audit risk model, AR equals IR times CR times DR, that DR piece is really the auditor's response to those risks. So the auditor's role is always to detect material misstatements to make sure that those financial statements are not materially misstated. So how does the auditor do that is what I want to cover in this video. So before we can assess or prepare our tests, we need to know what assertions we're most concerned with in this cycle. So pause the video and just jot down for a minute what you think the most important or the most relevant assertions are. So if you wrote down occurrence or existence, you would be right. We want to make sure that all of the sales that we have listed actually transpired and actually occurred, actually took place. We want to make sure that those accounts receivables that are recording actually exist and someone is actually going to pay us back for those amounts. Also relating to that, valuation, making sure that they are those accounts receivable are going to actually be collected and we don't have any bad debts sitting around in there that need to be adjusted. Classification may also be important, making sure revenue is recorded into the correct place. Completeness and cutoff could also be a concern, making sure things are recorded in the right time period. So those are the assertions we're most concerned with. So when we're thinking about our audit tests, those are the ones we're going to want to kind of focus on. So the tests that the auditors are going to have to do. So an auditor's job is kind of twofold. First, they have to understand the process by walking through each step from the order to the cash. We might visit the shipping department or watch how invoices are created, and then we're going to want to test controls and perform our substantive procedures. So here we have a list of what those could be. So in the tests of control, for example, we might sample a few sales orders, verify that the credit was checked, make sure that the sale was approved, check those shipping documents to make sure that they were reviewed before they were invoiced, make sure the goods were shipped before the invoice was sent out. Those are some of those control tests that we would do. Then moving into our substantive procedures, here we could do some existence tests such as picking recorded sales in the accounting system and then tracing them back to the shipping documents to confirm that those goods were actually shipped. On the completeness side, kind of the opposite side of that coin, we could choose some shipping documents and trace those forward to see if they were actually recorded as sales and ensure that no shipments are left out from revenue. When it comes to cutoff tests, again, this is making sure things are recorded in the correct period. Maybe we could confirm with the purchaser that they were recorded in the correct month. And then finally, reviewing cash receipts. Here we want to confirm that the cash received matches the invoices recorded by sending maybe confirmations to the bank or counting some of those cash deposits.